Good afternoon, everyone, and thank you for joining us for this session where we're going to be talking about the current fundraising environment for fintechs, both now and looking to the future as well. I'm joined by an esteemed collection of panelists here, and we're going to cover the whole life cycle of fundraising, from seed finance through the various letters of the alphabet to looking at capital markets later in the process as well. So my name is Simon Toms, a partner at Skadden, based in London, looking a lot at growth capital, particularly in the fintech space. And I thought I might start with you, Susanne, just to talk about the market that you're seeing on the angel investor side. Are people still deploying lots of their own money in the early stages of fintech company fundraisings?
Yes, a good question. What we see in FinTech circle in our investor network, where we are private investors, private angel investors, that people still deploy capital and invest in startups, but are, I would say, more focused on the better quality startups than ever before. And I think this has been a result of what we've seen in the last 2 years, where inflation went up up to 11%, in fact, has gone down now, but where especially private investors who invest their own capital and who don't have to invest in startups, they can keep it on a liquidity and a money market account and earn 5-6% risk-free. So for those investors who take the investment decision to invest in startups, they must make much more certain for themselves to ensure a good risk-return benefit and to basically make sure that the startup has got the potential to scale and to find follow-on investments, over a reasonable period of time. And that's what we see, and that's why this funding ladder is so important to function. That's why I'm so happy to be with scale-up funding partners here on stage, because angels can only succeed long-term when we've got follow-on capital to invest after we've invested.
So when you're looking in your group for the type of companies that want to invest at the early stage with a longer-term view, what particular types of fintechs at the moment do you think are proving most attractive, or what business models are attracting the most attention from your network?
Yeah, FinTech Circle, what we do is we have got this application process where startups have to send us, their pitch decks. They have sent us an elevator video, a pitch video, and then we invite them to selection days. And what we are looking at the moment is very much companies, focused on using AI solutions, focusing on ESG, green fintech solutions. So really working more on the cutting edge of new business models which we've not seen in the past. And we also look at very experienced founders. Ideally, we would like people who have got, a competitive edge, because at the early stage, the team is so critically important. And so we really want to understand, why will these founders and this founding team be the successful one going forward? And then, of course, we look at the market size. Is the market big enough to make it a big, successful investment? Is the product competitive? Are the unit economics sensible, so when the startup grows, it will become profitable at some stage? Because in the past, before COVID, people were investing long-term without having a path to profitability. And this has changed now. Now it's much more about this company has to make money at some stage, so we want to see the path to that now already.
So it sounds like a big shift from looking at operational profitable growth much faster than perhaps was the case before.
Yes.
Interest rate rises. Is there something in particular that you think founders or early stage businesses can demonstrate when they're presenting their plans to your investor group that lands well? What lands best when trying to show that? Because it's obviously harder at the early stages to demonstrate that it's much of it's in the PowerPoint deck rather than in reality. So how do you think that's best communicated?
Yeah, I think that's a skill in itself. Good communication, good pitching is a skill in itself. We always look for strong, confident founding teams. We like diverse teams. We talked about that. Often we don't have enough diversity on the founding team, so we like that a lot, because we believe there's better returns, better results coming. In fact, there was a study today which came out that those companies where female founders are part of the team achieve 30% higher revenues overall. So there's news, data just came out this morning. And so I would say we look at the diversity of the team, we look at the experience, and it is important to be self-confident, but having no attitude either. So that's very important. I think you don't want people who don't take feedback, because all our investors in FinTech Circle are experienced investors. Some of them have sold their businesses, have exited, and now reinvest their money into startups. And we like to provide smart capital, which means not just money, but our expertise, our network, and so we like to be able to share that, and to have somebody who appreciates, this exchange of dialogue and of help.
Good tips there from Susanne. So looking into the sort of next stage when you're beginning to look at, say, a Series A round, founders already got, or the company's already got some growth under the belt. What are you looking for when you invest in companies in this environment, as opposed to 2 or 3 years ago when perhaps it was easier to raise money for companies?
Yeah, sure. So my name is Malin, and I'm a partner at Project A, and we invest early stage, so pre-seed, often along with angels like here, seed and Series A in Europe. I look after our FinTech vertical. I think what Susanne already talked about is obviously something we look very early on in companies. It's a little more than a team. It comes down to who are these people, what can they bring, and how do they complement each other. As a tech VC, we often want to see that one of the founders is a technical person, have a CTO. But if you think kind of, I guess, more broadly, the type of FinTech waves we've seen of companies, we started seeing unbundling of financial services in the early investment stages due to cloud and mobile. And that was the consumer FinTechs in the payments and banking and so on, and building great consumer propositions. That then spilled into consumerization of the enterprise, often targeting SMEs, also then going into mid-market and larger companies. And now we're also seeing how financial services are moving into non-financial propositions with embedded finance. Across all of these things, given that there's no longer a zero interest rate environment, we're seeing tuning of business models to tap into that cash and those deposits as well. But I think what is very exciting in FinTech is you can build unit economics as a ladder with not only SaaS fees or transaction fees or interchange fees on cards, but you can also then build on top of that very exciting models on FX for cross-border payments, etc., and also add on what you can gain from others. I mean, treasury businesses are incredibly popular to start at the moment. But yeah, the funding environment is, if you kind of think about the blip, or rather big amplitude of funding that went into FinTechs and technology companies in general in 2021 and kind of those half years around, it's not that bad in terms of how the funding environment looks like. We're seeing probably similar to 2019 levels in 2023. We were hoping as investors to see a lot of excitement around companies coming back to market in the last or the second half year of 2023. The quality wasn't maybe that great, especially on the A's. But in seed stage businesses, quite a lot of them got funded, had really, really good fundamentals. And then now in the first quarter of 2024, we're rather busy.
That makes sense. I think it's chimes to what we're seeing as well, that the early stage funding was still very a strong market, but it's tough last year, certainly for companies to be raising Series A and later rounds. So good to hear you're positive on 24. In terms of other, you talked actually about some stalwarts of the FinTech sector, more payments, FX, those kind of businesses. Are you seeing other segments like ESG and AI that Susanne mentioned as attractive, or do you think they're overheated or not delivering on some of the technology that's promised? Or how do you see other more developing segments of the market?
So I'm quite excited about the whole FinTech stack, obviously with focus on revenue optimization, cost and spend control, the whole stack from planning, procuring, and paying. There's a lot of interesting companies there that can build nice wedges using LLMs. So I think the whole, within FinTech also, accounting is obviously, or other professional services, there's opportunity to use LLMs to build nice wedges and make work more efficient and probably also more interesting for the people who have the co-pilots as tools. Then you need to think about how you can build a big business out of that. If you have a big fund of several £100 million, euros, dollars, you can't invest in a small tool. It needs to be the companies that then want to go after the ledger or build a new ERP of the future. Other than that, in insurance as well, let's kind of count that to FinTech, although it was a big GDP driver on its own. good uses of smart uses of data sets in order to underwrite risk and also price it better as well, very interesting. But embedded finance with, finding payments, insurance, and banking, etc., within other non-financial propositions, vertical SaaS plays are enriched. I think that's interesting spaces too.
Okay, interesting. And then you mentioned technology and CTA being an important part of your process. Could you describe that a bit? That's quite interesting to sort of hear what diligence or what questions you ask as you're kicking the tires on a business before you invest.
Yeah, so referencing is a big task for us, especially this early stage. I think it should be whenever you invest in a company or hire someone. We have an operational VC model, which means that we have around 100 operational experts across engineering, data, go-to-market, talent acquisition, etc. So we also use our team quite a bit to spend time with founders in the early stages to assess an aptitude, how they're thinking about not only the technical aspects, but leadership and building a big business.
Okay, good to know. So, Alasdair, the optimism is building as we move along the panel. Does it sustain to growth financing rounds in the current market?
Well, I'm Alasdair Haynes, the founder and CEO of Aquis Exchange. Just to give you background, it's the 7th largest exchange group in Europe, and we are the UK's challenger stock exchange. This country is brilliant at startup capital. We've got 2 examples here. We have tax breaks like SEIS and EIS. And most entrepreneurs, if they're good with their PowerPoints or whatever, can actually raise that capital and have exactly what you said. We are rubbish as a country when it comes up to scale-up capital. These companies that have actually progressed and want to scale up get very little choice of where to go. The purpose behind Aquis Stock Exchange is to get capital to growth businesses to scale up. Now, where in the world is the best capital market? Like it or not, it is in America. If you go to America today, you will find 2 fundamentally different things to what we do in the UK. The first is there's competition amongst exchanges, and that competition drives innovation. And therefore, having an effective monopoly, which was what was happened here, is not the solution, and hopefully Aquis can change that. And the second, which is very important for Anand here, is they get the public back into public markets. And it is absolutely essential that we have public in the very market that we call the public markets. Exchanges need to modernize. In fact, I've often been quoted as saying, we need to make equities sexy. They're not. They're the least sexy asset class we have today because it hasn't been modernized. All the people under the age of 30 want to trade in crypto, which means that they are prepared to take risk. We cannot get these people today unless we modernize into equities, and they are a very, very useful form of funding for growth businesses. So there are things that we need to do. For example, there is a bias towards debt. If you're a company today, you're likely to use debt. Why? Because the interest payments are offsettable against tax. Dividends, of course, you pay tax. So there's there's inequality between the asset classes. We go to Europe, and the Commission announced only a few weeks ago a thing called Deborah. I'm sure you'll hear about her a lot. But the debt equity bias is going to be addressed. I thought when we came to Brexit, love it or hate it, that we would actually have a choice here to be able to do our own things. And yet at the moment, it seems to be Europe is getting ahead of us to fix some of these problems. We need to fix the problems for equities. We need to get the public back in. And we will, in that way, be able to drive real growth into the economy by the literally tens of thousands of British companies that actually are trying to scale up right now. Which is why it is so important my friend on the right is actually able to get the public in there.
So slightly less optimistic about the current situation than Alasdair, but at least some solutions there maybe to drive some growth in the scale-up capital. And what are you seeing in the primary bid marketplace? Are you seeing people coming, the public, enthusiastically looking to use their capital to back growing companies?
Yeah, look, very much. I mean, the public have always wanted to participate in capital markets. Hey, look, as a company, PrimaryBid, look, we started in the UK. We raised, seed funding here, Series A funding here, B funding here, C funding here. Total, almost $250 million of total funding. We raised, scale-up capital here. Actually, I found the early stage being the hardest And I'm so glad, to see Project A, companies like yours here and actually make that piece a lot easier. And I'm so glad that that tide has changed. And fundamentally, I think good companies will get funded across its life cycle. I think the main thing, we've touched upon this today, was, the last 3 years, you've just seen some violent increase in interest rates from 0 to 5. ZIRP is over, right? And so opportunity cost actually means something. And I don't mean it from a revenue growth perspective. I mean, everyone's looking at it from, what are your margins? What's your profitability? Because risk-free, you're getting 5-6%. That wasn't far off high yield rates, back in the day. So, that capital is getting sucked out everywhere. I mean, I think even venture firms are finding it hard to raise again. And so, you're feeling it all the way down. So.
And do you think, you're talking about venture firms and maybe they're being harder to actually raise the funds and therefore deploy the capital? Are you seeing private investors helping to plug that gap through your platform, or?
Yeah, well, look, we focus purely on the public markets, IPOs and beyond. And, there's a ton of demand coming from individuals in that space, and particularly in the US, if you look at the Reddit IPO and so on, Truth Social, that was all retail based. But I think, the topic of this was, the funding landscape, more for private companies. And I think there's a lot of funds out there with a lot of money. But the environment has changed so violently, so quickly. It's almost incumbent on leadership of the portfolio companies to think about, okay, how do I best, achieve my mission in the most, capital efficient way, in the most thoughtful way, because growth at all costs is no longer an option. And I think we're seeing that shift happen, and I think we'll see more of it coming up.
Great. Well, thank you all very much for your thoughts and the overview of the spectrum of capital raising. It sounds like hopefully at least over 24 we'll be seeing some stronger fundraising rounds as the year progresses. So thank you all to my panelists for joining us today, and thanks everyone for joining in the room.
Thank you.